So what I call demand and supply, all right? Demand level, supply level. Let me show you something. Basically, when you look at the chart, there are swing highs and there are swing lows, right? So look at this thing that I'm drawing. It's like an uptrend type of move. We see higher high,
Yes.
higher low, higher high,
Yeah.
higher lows. So these are characteristic
Yeah.
features of an uptrend. You can see this, right?
Yes, sir.
Now, in this uptrend, the zones where the market pushed out from, this is what we call demand and supply level, or what you can call support level. We actually call it demand and supply level. Do you understand?
Yes, sir.
Let me show you this. This now, this level, you can call this level a demand level. Likewise, you can call this level demand level. Do you understand? So
Okay.
these are the main level. Now, that's just the idea. But when you look at the chart, for a place to be called the demand level, this was the previous structure here. Okay, this was the previous high from
Yeah.
here. The market swinged up,
Yeah.
created a low, created another high. This
Yeah.
was the previous structure. Hence, this level was broken, and there was a big push leading to the break. Like the market left a fair value gap, an imbalance. Then we can call this a demand level, not just a support level. Okay, these are basically support level. But what makes a support level not a demand level is the fact that it led to a break of structure, as we can see. This was a break of structure here. This structure, this was the previous structure. All right, the structure was broken.
Okay.
This was the break of the structure. And then if we look at it on the lower time frame candle patterns, if you look at candle, if these were candles, you will notice a fair value gap. I will show you the fair value gap again. Then we can call it not just a support level, but a demand level. Okay, this is a support level. These two are support level. But what makes it a demand level is if it breaks a previous structure and then created an imbalance for us. Now I will show you what those imbalance are. Now I want to talk about imbalance. Okay, this scenario we have here. This is an example. Here, this was the previous structure, right?
Yes.
It broke. We call it break of structure. That was a break of structure, all right? And then a new high was created
Yeah.
here. Now, if you look at this structure, you can say this is your support level. Someone can call here the support level, right?
Mm.
Now, why I will not call this this was a support level. There was a gap in between this candle, a small gap. Yeah, that is also valid. But another demand level that we see, the most recent demand level that led to the push was here. First, let's identify our FEG. Here, between this candle, there is a space here. This is what we call fair value gap.
Okay. So, the fair value gap
It's
now.
a space between three candles. A space between three candles. Here we have candle one, candle two, candle three. The space in between them is a fair value gap. Do you understand?
Okay.
The
Yes.
fair value gaps
So,
are,
does it have to be either a green candle or a red candle to
it
be
does
fair
not
value
matter.
gap?
The color does not matter. Hence, there was a gap. Between three candles, there is a gap. Okay?
Okay.
Yeah. Here to this first support here, there was a gap. This is one, two, three. There was a little gap in between, but then this candle here came in and tapped it in and filled in this gap, tapped into this gap before it moved on. So if I wanted to buy this market here, the demand I'm looking to buy from is here. This is the FEG zone. All right. Firstly, this is the FEG zone, and then the last candle before the bullish impulse. Bullish impulse is when a lot of buyers came in, and then there is a bullish impulse, and that impulse led to an FEG gap, an imbalance in the market. All right. So this is demand. This is the demand level. That candle now, from the body of the candle to the wick of the candle, is what we call the demand level. Because at this time frame, a lot of institutional orders came in, pushing the market higher, thus creating an imbalance. If a lot of people buy once, boom, the, the balance between buyers and sellers has not been met, thus there will be an imbalance. And in the charts, we can spot it out. This is what we call fair value gaps and FEG or imbalance. All right, I call it FEG. You can call it imbalance, okay? It can be called inefficiency, FEG, imbalance. These are just names for the same thing, okay? I call it FEG. I tag it FEGs, right? That's the blue zone. FEG, right? That is the gap. The FEG again, right? FEG is a gap created between three candles. Between the three candles, when you notice a gap, is an FEG. All right, this is an FEG. This is a demand level. A demand level is only a demand level when it leads to a break of structure. This was the previous structure that was broken, right? It led to a break of
Mm.
structure. We call it BOS. Okay, an abbreviation
Mm.
for break of good. Abbreviation for break of structure is called BOS. Okay,
Yeah.
good. It led to a break of structure. Let me tag it up here. Write it down. BOS. All right. Yeah.
Yeah.
It led to a break of structure. Demand level is only demand level when price created a break of structure. Still in the break of structure, we had an imbalance which is called the fair value gap. And then the origin, the candle before imbalance is our demand level. This is it. I'll show you multiple examples. This is our demand level in this zone. The markets came back, it did not quite tap into our fair value gap. Then you should tell yourself, sometime in the future, this market will come into tapping here. He attempted to tap in, but it did not quite
Okay.
tap in. What happened? Yeah, sometimes near the future, the market came in and tapped into the zone. Not just did it tap in, it broke it and went lower. Even took out this level here. All right, but then it
Mm.
did like it took it out and went back up inside. So there was no confirmed break yet. But one observing, it broke it, came back into the zone, still broke it again, forget about it, it's done. Then you can say, okay, this pair is bearish. It is confirmed bearish based on demand and supply reading. Okay. Before this
Mm.
happened, you were looking to buy from this zone. Not all trade will play out well. Okay, this was just a very good example. That is why we should always use risk management. The market came back to this demand level. One could look to buy from this zone or from this zone. The market came back to the FEG, broke it at the same time, it broke a demand level. Now, what we basically do, we don't just blindly buy at a demand level. Rather, we want to see how the market approach that level. I want the market to come in and then cool down in that zone. And then on the lower time frame, I see an entry confirmation. Only then will I enter. I will not just blindly buy at a demand level because it's a demand level. No, but I will wait for price confirmation. If the price is coming in too fast into a demand level, or more, it could be like say I'm trying to catch a falling knife. I will not dare buy blindly. But rather, what I do, I wait for the market to calm down a little bit. Like you will notice the price action, momentum may change. The market will start fighting at that zone. And beautifully, on the lower time frame, an entry confirmation on the 15 minutes time frame could as be small as a bullish engulfing candle at a demand level. An entry
Mm.
confirmation could be another change of character in that smaller time frame. Do you
Mm.
get it? So these are two entry criteria that we use for this type of scenario, and it gives you a high win rate. Like I'm talking about around 70% win rate. Okay. Then trade
So
occurrence. What?
so that is FVG and demand level.
No, it is called a demand level. A demand level always creates an FEG. Do you get
Okay.
it?
Okay.
Good. Now, what separates an FEG? An FEG is always created by a demand level. Okay, that is why we call
Oh,
it a demand. Basic economics, supply and
yeah.
demand. Good. Now,
Yeah.
when there is too much supply, that the supply does not meet the demand, rapid supply, there will be an
Mm.
imbalance. In the chart, you
Yeah.
can see it, and that's what we call an FEG. You see that gap. Do you get it?
Okay.
Good.
Yeah.
Here now we have another imbalance. This is another imbalance. There are so many imbalance here in this market.
Yeah.
Look
There is
at
a
this.
clear one up there also.
Good. This one is here. Let's just keep marking it up for the sake of learning. This one here is here too. A lot of them, yeah. The ones that are very potent are the ones that I'll show you now how to spot valid FEGs and FEGs that you should ignore. Okay, that's a subject for another matter, another day. The goal for you today is just to spot FEGs. You can take your time and just be spotting FEGs. FEGs are marking in them blue. This was an FEG. This was an FEG. I did not mark this one on top because this one is already valid. I did not bother marking this one on top, although there was a gap. Do you get it? There's a gap here.
Yeah.
There's a gap here. But this is one that I'm marking because close to it is a demand level. It's a demand level that I can trade off from it. Demand level is the candle before the candle that created the FEG. The candle before the FEG. All right. This is it.
Mm.
This was a chinky demand. This was a demand level, created the FEG, it led to a break of structure. You get it?
Okay.
Yes.
Okay. The a candle before the FEG is the demand.
Beautiful. Beautiful. So it could be
Perfect.
bearish, oh, it could be bullish. Oh. Hence it was the candle before the FEG. You call it the
Okay.
demand level. Now, the same thing happens when you're selling. The last candle before the FEG is what you call your supply level.
Okay.
Good. Now, here now. Okay, what else? I remember what makes a demand. The market must create a break of structure for me to call it a what? A demand.
Okay.
Yes. If no break of structure was created, it is not a valid demand. You might as well call it support. Do you get it?
Okay.
Good, good. So that's just that. So what you will do for today, you will just put out demand levels, demand level. Now look at this point here. This has a structure. The market broke this structure here. Now, I see here from here to here, market
Yes.
broke. Now we will notice that there is an imbalance in these zones. Now, let me go and plot my supply level. The move where all these things originated from. There is a gap here, all right? This gap is also another form of FEG, but this gap was created majorly like all this weekend move. When the market
Yes.
just opened, boom, it leaves a back gap like that. You still count it in. That is the gap. So if that is being said, where will I call my supply? The last candle before it is actually this doji indecision candle that is a supply level then. Do you get it?
That doji candle.
Bam. That is my supply
The-
level.
the-
The last candle before
excuse
the
me. The
FEG.
doji candle behind the green candle, right?
This is it.
Okay.
This is my supply level because it's down, it's going down, selling. So it's a supply. Do you get it? It left
Yeah.
if an FEG. Right now we have multiple FEGs. Optimum trading zone is if the market should find itself around here and the structure has showed you now that the market structure is on a downtrend. You want to take your trade from here. Do you get it, sir?
We take a trade from the demand level, right? The
Supply.
supply level.
Yes, yes. You might take it from the. Sometimes it will not get to the supply. Sometimes it will just get to the um to the FEG. It will not hit the supply. Do you get it?
Okay.
That's why in this case, I will wait for the market to come around my key zone. These are called points of interest. Where I am
Mm.
interested in entering the market from. Okay. When the
Yeah.
market comes to my point of interest, I will now go to the lower time frame for some confirmation to enter. Do
Mm.
you get it? On the lower time
Yeah.
frame, I will wait for confirmations. I will wait for candle confirmation. When I get my confirmation, I will enter. Sometimes the market will just come and tap the FEG and massively reverse. All right. But I like trading with confirmation. There are so many traders that in this type of situation, they've established that the market is on a downtrend and they want to sell. You want to sell from a good price. All right. So some of them will just trade like this. Yeah. They'll just put their stop loss. This is the stop loss, right? Anything that makes the market come and take out this high, then obviously the market is no longer selling. True or false?
Cool.
They'll put their entry here since this zone is not too bad. The stop loss here is not too big, it's like 43 pips, giving it enough room. And then they'll target simple 1 to 2, or they'll target all the way down to this low that was previously created. Let me show you. This was the low now, the wick that was
Mm.
previously created. This is it. And this is how some people trade. They will wait for the market to come back. If it come back, boom. And I tell you, taking this now, here you're risking, for example, only 1%, and you're targeting 6%. Taking this over time, sticking to it still makes you profitable. Do you understand?
Mm.
Now, yeah. Now, why I don't do it obviously like this? Yes, this works. I would like to wait for it to come. When it comes around this zone, I will see the reaction, then I'll enter. I might end up not entering at this zone. I might end up entering somewhere around here. Then when I enter, I will know that it has a more higher probability, not just getting wicked out. Now there is another FEG here, not just that zone. There are multiple FEGs here. Here there is a gap between these three candles. This is the gap.
Mm. So
Uh,
FVG now, if we are marking FVG, we mark the whole candle that form the FVG, right?
no, we mark just that spot where the FEG was created, the gap, not the whole candle, the
Okay.
gap.
Okay.
Do you see these candles? One, two, three. There is a gap, right?
Yes.
This is an FEG. Now, this market move is creating a funny situation. This is not textbook setup. Here now we see double candles together. This is obviously
Yes.
not an FEG. But one should
It
note,
is.
yeah, this is not an FEG. Someone can call this a supply, yeah, but then this is also a supply level for the sake of supply drawings. Do you get me?
Yes.
The candle before the impulse, right? Now, if
But it's a very complex candle patterns like this because it's a
this
double
is
kind of pattern.
good, this is not what you see every day in the market. That's why I said
Mm.
it is not the normal textbook setup. You get it?
Okay.
But this is what makes a learning real. Not just me going to go and find pick or cherry pick a chart analysis and then show you boom,
Yeah.
boom, boom, right? But this is me just going through. Now, in this case, all you do is you plot it and you wait. When the market comes back to these zones, right? If you get your
Yeah.
confirmation, you sell and your stop loss is here. If this doesn't
Okay.
play out, this is your last zone. These are your last zone, and then you sell. Some people might, in this type of situation, they'll be like, oh yeah, now the market can either react from one or from two, and I am not going to be active on the chart. I don't want to miss out on this move. There are some people that will take this trade from here. They'll put their stop loss here, and then perhaps target simple 1 to 2. 1 to 2 is a normal golden rule, yeah? 1 to 2.
Mm.
I will wait. Some people will do this, and it will still work out well for them. Market structure is king. Price action is king. Have you heard of this statement before?
Mm.
Price action is king. You're trading with the price action. Price action. If it's in a downtrend, I am seeing lower lows and lower highs. That's it. Now, why I am selling at supply and FEG, it makes me sell at a premium level and buy at a discounted level. What do I call premium and discount? In this thing that I sent you here now, that I drew here,
Mm.
right? If
Yeah.
you want to buy low, right? And if you want to sell, you
Yeah.
want to sell high, right?
Yes.
Now, anything between, if I'm to use fair value gap and Fibonacci retracement tool, anything, this is a Fibonacci retracement tool, anything below the 50% Fibonacci retracement tool is a discounted price for me to buy. Do you understand?
Yeah.
Now, anything above the 50% is a premium zone for me to sell. So if you're in a trade and you want to buy and the price has not retraced up to 50% of the previous move, you're now buying it at an expensive price and you're not buying it cheap. Do you get it?
Mm.
Good.
Mm.
Now, when you're trading with demand and supply, it helps you trade from a discounted zone in as much as the market is going to be bullish. All right, no problem. I will take trade. I will be buying these things cheap, and then I stand the chance of getting better wins out of my trade. No be when you expect the market. Sorry. For example, I want to buy this pair. I see that the market is obviously buying. Some guys will just go carry themselves. Oh, it is buying. Oh, let me go and long. Some people go and buy at this zone. Will you buy at this zone? Can you see this clearly? Let me remove the FEG, the Fibonacci gap. You seeing this?
Yes.
Some people will buy at this zone and they'll put their stop loss here. Yeah, this is me following price action, no problem. And now where is their target? You might be looking at previous structure. Maybe there could be some structure above, or they'll make it 1 to 2 or whatever. But then this will be reducing your risk, your R out of the trade, your risk to reward. Now it make you might not have a good risk to reward. It is not okay. Let me say this is what they're targeting. They are doing 1 to 2, no problem. And then they took this price here. Why buy high when you can wait for the price to reduce a little bit? Now with Fibonacci retracement tool, someone could be like, okay, oh, let me wait for the market to retrace to around the 50 or the 60% retracement tool, then I can take my entry. This is another way of thinking, because when I started trading, I traded with different things until I started using support and resistance, demand and supply. All right. Now someone could say, okay, I would like to buy only at these zones at 60% retracement tool. Now, if someone should buy here now and his stop loss is still here, the trader should have given you 1 to 2. You ended up getting 6.5%, 6.6 out of it. Do you notice that?
Mm.
Let me say you were risking 10,000 naira in this trade before to get only 20,000 naira. No problem. The trade might end up playing in your favor. No problem. But then if you started buying from discount and don't just buy high, that trade now that you're risking 10,000 to get 20,000, you ended up risking 10,000 to get about 66,000. Do you get it?
Mm.
Isn't that
Yeah.
absolutely worth it? Now, that is why you have to buy from a discounted zone. Plus, when you buy from a discounted zone, it helps reduce your exposure. You will not be risking too much in that trade. Now, when you
Mm.
now mix it up with the boss, which is demand and supply, the demand zone now ended up being even much lower. This is the demand level here. This was the demand level. This might be an FEG. You buy from demand, and then your stop loss is just at the demand zone. It gives you a more beautiful scenario. You're risking one to get 9.2. Quite awesome. That's why demand and supply works a lot. It reduces your exposure and it gives you more high win rate. Okay? So that's just that for this illustration. Demand and
All right.
supply. Now let me show you supply. Enough example on supply. This was our supply level. You can mark this trade. Oh, when the market comes back to this zone, hence market structure is bearish. I am looking to sell. You just keep observing it. What I do is this. I even set an alert on trading view. Oh, when the market comes back to this zone, alert me. Then I look at it. And then I will not just blindly enter. I might type this here on my trading view, but I'll wait for the market reaction. I want the market to come in there slowly, not too fast. Because if the market rush into that zone, it might just go there and break off this level because of that was a strong momentum that is pushing it there. But if it's coming into that zone and then momentum is reducing, it gives me more confidence in okay, this zone indeed will hold. The price action is still valid. The trend has not yet changed. It's still bearish. Thus, I have a chance of selling from here for a higher win rate. Do you get it?
Yes, sir.
So that's just how it's done. All right. So that's just how it's done. And that's how I trade. That is the trade I took on Euro USD, which I sent to the community last week. This is it. I marked this zone. Let me see if this is it. No, this is not the chart. This is the chart. I marked this zone since like it's been long. I know it was I marked this zone around January, ending of January. That's how patient I was, waiting for the market to come
Wow.
to this zone. I have been trading around it too. I have been buying and selling, no problem, buying and selling, right? Now the market finally got into this demand level. It got into this demand level around the 13th of March. I did not
Mm.
just buy in the first tap, okay? I bought for
Mm.
GBP USD on the first tap, but this guy I did not just buy. I waited for a confirmation. Now on the lower time frame, this is my third pattern, right? On the lower time
Mm.
frame, what did I see that made me to start? And this trade, this is where I'm targeting. But on the community, I did not push it this far. Yeah, on the community, I gave you guys a simple 1 to 2. Now this is what I did. The market tapped into this demand level, right? Then I go to the lower time frame. Let me get myself some confirmation. I want to see a change of character. Okay, this is what we call entry
Mm.
confirmation. I want to get a change of character. Okay, I want it visible for you. Good. So this was a low. If I had to look at market structure mapping, let me use a pen. It's more faster that way. This was this is a lower low, right?
Mm.
Lower low, no, lower high, right?
Yeah.
Lower low, lower high, right? Market structure is bearish. Then here, market
Yes.
created a what? A
It,
higher
it,
low. Then he gave
yeah.
us a break. Here, he now created a higher high. What
Hi.
does that mean? Break of structure has occurred here, still inside that demand level. So what am I looking for? Price action has changed. Now I'll be
So
like,
hold on, please. When there is a breakup structure, it's a confirmation that the market will be reversing from either bullish or bearish.
if the market was bearish and
Mm.
then it got into a higher time frame POI, point of interest
Yeah.
or demand, or could be
Yes.
supply. And then the market now from bearish structure now changed to a bullish structure.
Mm.
That means, okay, this is giving me confirmation to buy because I actually wanted to buy at that demand level based on market structure and the higher time frame. But then I am
Yeah.
waiting for confirmation. Then on the lower time frame, I saw that the structure now changed from bearish structure to bullish structure. What does that mean? I have gotten my confirmation on the lower time frame. Do you get it?
Yeah. What I was asking is breakup structure. I mean BOS. Is it
Yeah.
a confirmation? Uh, Market may be changing direction.
Yes. It's a confirmation the market may be changing the direction. Okay, because what makes an uptrend is this: we'll be seeing break of structures. If it's an uptrend, we're seeing break of structures to the upside. If it's a downtrend, but being seeing break of structure to the downside. You understand, right?
Yes.
Good. Now, in this part here now, this market I was selling, right? This was the
Yeah.
low. This was the previous low. The market broke this low, went to the downside. The market broke this low, broke this second low. Let me mark everything for you. It broke this second low, went to the downside. We're seeing break of structures to the downside. Here now, this was
Mm.
another low. Market did not break it. The last structure we expected the market to break. That means, oh, it's still selling. Oh. The market no break am. The market did not break it. Instead, what happened? There was an FEG here, no problem. Market came in to tap into it, still tap it in, like bounced off, created. There was no fair value gap inside here, no problem. Broke it for us again. Okay, that means the market structure has shifted. Oh. The market did not
Yeah.
break the structure to the downside, rather it broke it to the upside. Then what else am I
Mm.
looking for? I will look for another swing, a higher low. This is the first higher low we're seeing, right?
Yes.
A higher low has been created. Firstly, the basic foundation is market structure. Higher highs are uptrend. Higher lows, higher highs. The market will give me higher high, higher low, uptrend. For a downtrend, lower highs, lower low. All right. Now this thing is now showing us, okay, the market want to change. Now, what is the first thing I will do? This is my demand level. I have seen the first leg is telling me, okay, price action is changing. We are trading with price action. Price action is changing. So what am I looking for here? There's an FEG zone inside this gap. Are you seeing it? There is a gap here.
Yes.
Good. There is a gap here. This gap was created inside here. Let me paint it. I like painting it green, blue, not green. Okay. This is it. An FEG was created here before the break. That means this is my demand level. This small guy here is my demand level because it's what it was created before the break. That means if price come back to this zone, I'll be looking to buy you. That is just what it's telling me, based on what we're
Mm.
studying. But because of this zone is too small, I can even factor in this week inside it. But normally it should be this candle. I can call all this my demand level. When price coming back into this zone, I'll be looking to buy. Or just simply let us follow structure. This is it. Here now I'll tag this one green. This is how I get confirmation. After the market has come into my higher time frame POI, I go to the lower time frame, wait for structural shifts, then I look for where I will take my entry from. Right. So this is like when your trade is cooking, it comes into your POI, you go to the lower time frame, everything is aligning for a confirmation. Oh, your trade is cooking. Now the next thing is doing we're looking for an entry. All right, the market is still pushing up, pushing up, pushing up. This is an FEG. This is the demand level. An FEG was created here. Did you notice?
Yes.
So this was a structure that was a previous high. All right, this was a previous high. The market
Mm.
broke it, but before it broke it,
It
this was
created an.
good. It created an FEG. You will still tap the FEG for the sake of tapping FEG, okay? For the sake of drawing it, because I want you to spot a lot of FEGs. And where is the demand level? Demand level is this bearish candle, right?
Yeah. Is it bearish or bullish?
Now the FEG is this bullish candle. This is
Yeah.
it.
Yeah. Yeah.
The FEG is the demand level is this bearish candle. Yeah.
Yes.
Good.
Yes.
The last candle before the impulse. Some can call it the bearish candle before the bullish impulse, but it's not always bearish. It's just the last candle before the impulse, and that impulse led to a break of structure, and at the same time, it created a fair value gap. Okay.
Even these this FEG now. I mean this demand level now,
Yeah.
and the FEG, they are like an engulfing candle, like green engulf the red.
You can call it that. It's not always like that. It's not always like
Okay.
that. It's just like a momentum move. You want to catch the momentum. How do I put it? Demand and supply. In economics, when demand is high, the price of an asset will appreciate, right?
Yeah.
Now, when supply is much, the price of an asset will depreciate, right?
Yeah.
Now, when you're now trading forex markets, understanding demand and supply, it gives you more understanding. Now,
Great.
if there is a demand for an asset, it appreciates. Thus, you see the momentum push it up, boom.
Yeah.
Now, when this happened, because of the fact that for that given time, the people that were buying were more than the people that were selling, it will create an imbalance in the market. There will be no
Okay.
balance. That little thing will create an imbalance. Now you will spot the
Mm.
imbalance, you will draw the imbalance. And then where did that demand come in? Where was that
Mm.
zone that all these things started from? You can mark it as your
Mm.
demand or supply if it
Mm.
was a downtrend. Do you get it? Now, when the
Yeah.
market comes back to that zone, that is where you're looking to buy it again. Do you get it?
So when the market retrace back to the demand,
Yes.
that's
Or
that's what.
when the market retraces back to the demand or the imbalance, that is where you want to buy again.
Okay.
Good. Now,
Okay.
as we move forward, I will give you specific times when you should know that oh, you don't need to wait for the market to get to demand level. Just buy it from the fair value gap. And there are times where do you get it? But in most cases, right, depending on the
Mm.
asset you're trading and depending on the time frame, sometimes you don't need to wait for it to get to demand. You just buy it from the FEG. Do you get me?
Okay.
Now, mind you, this case here, we have a lower, higher low, right? And then we had a higher high,
Yes.
led to a break.
Yes.
We will not
Yes.
want to. How many demands do we have? We have two demands. We have an
Yes.
FEG. Now, if I tell you that you should always buy at a discounted price, do you understand?
Yes.
Now, let's plot this. At a discounted price, if you use your FEG, discounted price is anywhere below the 50% retracement of the FEG of the Fibonacci 2. Do you understand?
Okay.
Good. If I
So how
plot
do I
it,
identify the 50% in this Fibonacci tool now?
now, are you seeing these numbers? You see 1, 0.8, 0.6, 0.5. This 0.5 is 50%. Okay, this is the line.
Okay.
Good. This is the
Okay.
line. All right. So anything below this zone, I am not interested in buying this market. Do you get me?
Okay.
Automatically, this zone has been disqualified. It's not valid. I will wait for this zone, so I'll buy from here. Do you get me?
Okay. So we'll wait for this second
Demand and
the
demand
first one
level.
that we marked.
Yes. You wait for this
So,
level.
so it should be below when we want to buy, when we are seeing to buy, it
Yes.
should be below 50%.
Yes.
But when we are seeing to sell, it
It
should be
should be
above
above
50%.
50%. Beautiful. You want to
Okay.
sell high and you want to buy low.
Okay.
Now, I have gotten to the point where I don't need to use FEG to look at it from the market. Even when you look at it like straight, if you look this thing has not retraced up to 50% of the move. Let me show you. Let me show you an example. Let me use this thing for example. I go. This is a long move, right?
Yes.
Now, if I'm to keep this thing straight, this is a long move. Let me see. This is a more better tool. I'm coming. This is it. This move, boom. Has this guy gotten up to? I'm coming. Has this guy gotten up to 50%?
No.
You don't need any tool set to tell you. So I go see him. Has this guy gotten up to 50%?
No.
You see him. So you can spot it automatically. But has this guy gotten up to 50%?
Yeah.
That's it. That's it. You get to the point where with your eyes you can calculate it, but before you get to the automatic part, you can be using the tool to count it. As you
This man. Kai, how many years you don't dey study this one?
no be here. You understand it. Your mind, you get to understand it. Now we're not just trading patterns, we are trading what we are seeing. Okay?
Okay.
Yeah. So now we wait for the market to come back to the zone. So anything happen around there, I can call it manipulation. I am not yet ready to buy. Now this guy came back to this zone. This was a real life story. I watched all this thing happen, right? When I was waiting, the guy came here, but it has not tapped into this zone. Here now, do not forget, there is also an FEG here. Oh. Let me show you. Here too, there was a gap. Then I'm seeing double FEGs at the same zone. You get it? It happens at times. Are you getting me?
Mm.
Now,
Yes.
sometimes the market will just tap the first one and it will not come back to the second one.
Mm.
Now, let's use our FEG to see if that second one is within the 50%. Then I'll tell you what I actually did in real life in this case. I actually traded this on my own. But for the sake of learning, let's review it logically again. This was the break. It was actually 50%, right? This FEG was 50%. Can you see it?
Yes. Yes.
Now, in this case, what will it do? Sir, most cases, we don't always know what's best. But based on back testing, it is okay to do it and use a good risk. So what I actually did here was to buy me on my own,
Mm,
and I did not share it with the community. I bought it around here for yeah, I know I bought it I think around 700 or so. I bought it around here, and this is a good stop loss based on what the market is giving us. Do you understand? This is our demand level. Do you get it?
mm, yes.
So I target 1 to 2. That's my normal risks. Just 1 to 2. That was just it for me. Now, but
So
this was what I did myself. Targeted 1 to 2. It was not even up to the previous side. Now, this can be somewhat risky. That's why I did not share, because I still see an FEG zone here. This might just be the market coming to collect liquidity. And then for
mm,
me that I've been watching this thing for months, not like months, since January, the market came
mm,
in. I was like, make I no miss out on this move. So I actually did open here. Right. So
mm.
this is not a best rule book example, but I just told you what I did. I opened here, I took the trade, and then I came out. Now, moving forward, let us see what the market did. Now, this zone has been invalidated. True of us.
True.
Now, let's
So
watch.
excuse me here.
Yeah.
So this demand, the upper demand and supply level that we marked, sorry, the
Yes.
demand and FEG level that we marked up here.
Yes.
This is simply the market trying to sweep up liquidity, right?
Beautiful. That's it.
Because I realized that it ranges here.
Yes. It
Okay.
used it as liquidity and collected enough liquidity to buy. Now,
Okay.
when you were trading, I didn't want to rush it too much. Looking about liquidity, type of demand they should be trading. If the market has not taken liquidity before it enters the demand level, sir, that level is most likely the liquidity zone.
Hmm.
Honestly,
Oh, that is what they call fake out. Fake out.
thank you. If you never take liquidity before you enter that zone, that place is most likely the liquidity, because liquidity has to be created. Let me give you an example. I am an institutional trader. I want to buy 6 trillion USD worth of Euro US dollars. For example, if I want to buy 6 trillion USD and the trend is in an uptrend, nobody will want to sell up to that amount. Retail traders will not massively be selling, will they? No, the majority will not sell because the trend is in an uptrend. Rather, they'll be buying. So what do? I have to find a way to induce them to sell. Another way to do it is stop loss hunting. When I take out their stop loss of any buyer, it automatically triggers a sell order. Do you get me?
Hmm.
And this is the dynamics of the market. It's not like they're trying to hunt you. They just have to fill in their order. If
Yes.
people are buying at this zone, let me say I am getting 3 trillions from here. I'll find a way to induce this market to make sure that the stop loss of these buyers are triggered. So they will now sell to me that want to buy. When their stop
Hmm.
loss, the stop loss of a buy trade, when it is triggered, it automatically creates a sell order. Do you get it? It's just like, oh, I buy this instrument at this price. My stop loss, sell me out of my position when it gets to this level. So automatically
Yeah.
a sell order will be created. Do you get it?
Yes.
So filling in that pocket. So that's how it is. That's how it is. So anytime you want to take a trade, if you're using this principle and the market is approaching a demand level, but you have seen that no liquidity has been taken, then most likely that zone will be used for liquidity. Do you get
Hmm.
it?
Yeah.
Good. Now, what we do in this case, sometimes when the market has not done any of that, what I personally do is I will wait, because the market will now do that thing you call it week out. It's coming, tap you, week you out, and then go back in, and then shoot
Hmm.
off. Do you get it?
Yeah.
And these are signs that the big money was involved. They came here, they took out the liquidity they wanted, and then immediately the market shot back up and then broke the previous structure. When you see this, this is an example of the market using a demand level for a liquidity sweep.
Hmm.
And I've seen this one too many times. So that's that. So now, after that first trade was taken, all right, so I'm observing. I'll look for where I can trade. Is there any imbalance here? No imbalance. There was no gap. No imbalance. There is an imbalance here.
There's an imbalance here around that doji candle. Is it doji candle?
Yes. Good. I call it an indecision candle. Well, it's an indecision candle. Yeah, this is an imbalance, right? So if I want to
Well,
create demand,
it's kind of blur at my end. I'm not seeing it so clearly. That's why.
what of now? No, you called it a doji
Yes.
candle. It's a doji candle. A doji candle is
Yes.
just an imbalance candle. Do you understand?
Yeah.
Good. Now, this is the FEG and this is your demand for the sake of demand. But we know that this demand, I am not interested in this type of demand. It's not looking healthy at all. Look now, this was a break. This was a structure. Just immediately, I'm not so trusting it. It might look like another liquidity sweep, but I've already taken profit and I'm just calm. I'm waiting to see. This is it. This is it. So let us observe the market's move. We are moving forward. The market actually came into filling this FEG. You notice, right?
Yes.
It came in, tapped it one, two, three times. It don't do it in one do. Anything with the market, if the market should come back to this zone, it will definitely break it. But then this demand level, we're still observing to see. Moving forward, the markets came back, as we know, came back to do what? It broke it and came back inside it.
Yes.
Now, this is that liquidity sweep. Take out liquidity, went back inside. Then this demand level is still holding. True or false? It has not been taken out.
True.
But then what
Mm.
are we seeing from market structure? Expected a higher high, market is struggling to break. You will call this a resistance. That is the resistance up above. Getting it?
Mm.
Now, this
Yes.
was a bearish candle. There is an FEG that was created here. Price action is king. This is a gap here.
So you are a price action trader
Yes,
purely.
we should be price action traders. It gives, like, you're reading the price. If you're a price action trader, you're faster than indicators. Indicators is trying to read the price, and indicators are behind. But when you're trading with price action, you will find entry before indicators will find entry, and you exit the market before indicators will exit the market. It from me that was trading with indicators early from when I started. But then from 2023, I started focusing on price action. You get it?
Mm.
Yes.
Mm.
Although I still have an indicator that I use from time to time, but it is for a different purpose altogether. Yes, I use it for an extra confluence, but price action is king. Anything you're looking for, just maybe to add up or to minus, but just price action is what you should be trading. Now, this is this. Like, I have session breaks that shows me Sydney session, Australian session for session liquidity and manipulation sweep, all these things, but these are just some concepts. All right, this is an FEG zone, right? You can see this small pocket.
Mm.
Let me close it well. This is it. This was the zone. It is not exactly this one. This is it. Can you see this gap?
Yes.
And this was the candle that led to the break, that led to this FEG. And why am I calling this a supply level? Look, the market was finding rejection at this top. And the markets came in, tapped into this zone. Here, this level was broken, actually. This was a high, lower low. A higher high, broke it. That was a break of structure here. But all this thing is internal liquidity, oh, internal structure, not external structure. Do not let internal structure confuse you, okay? All these things by
Mm.
internal structure. It broke it, not a problem. Now, I know that I have a demand level that I'm looking to take a good buy from below here. Do you understand?
Mm.
Now, someone can actually take a sell trade from this FEG. Then the stop loss will be this high because you're expecting the market to sell into a POI for you so you can buy. True or false? Now, this is not always advised to do. Are you getting me?
Yes.
It's not always advised to do, but sometimes it works. But it's best to just stay patient and wait. But out of experience in the market, I sold this market, but I sold GBP USD instead, not Euro USD. That's why I gave a sell trade, GBP USD sell on Tuesday. Because of the same principle, I sold it. Now, this is the trade. I sold it for a 1 to 2, still targeting this zone. I did not go down all the way. I went with 1 to 2 because I know what I am doing. I am counter trend trading at this point. The market is still bullish. But based on structure, I saw that I want this market to sell lower. So, but before it sells lower, at least, let me take some profit. That's why I did this. And I gave a sell trade. I'll show you that on GBP USD. But this is a sell trade. The market came in, it tapped into that FEG zone. All right.
Mm.
Yeah. Hence is 6 p.m. I don't 6 p.m. 6 hence is 18 GMT plus one. I don't trade again. So this thing happened around what time was this? Around 4 o'clock. And that was the same time I sent my GBP sell trade. I will show you that trade, don't worry. So this is a sell trade. I did not bother selling GBP USD and Euro USD at the same time because both of them have the same price action. So I just sold one and left the other one. All right.
GDP USD and Euro USD has the same price action.
Yes, they are similar to each
So
other. So there
if
is a
somebody got right on GDP USD, you can use the same setup for Euro USD.
yes. If I open it, you see they mirror each other. I'll show it to you. All right. So that in charts in trading, there is something called price correlation. Some of them aligns. This is what I do when I look at DXY. Like on Thursday, I told you guys that if DXY should reject from that supply level that it is, then we are looking to sell it. And it's rejected from there. So if I'm selling GBP, if I'm selling gold, if I'm selling US dollars, that means I am buying Euro USD. And that's why I also gave the buy trade more confidence for the buy trade. So that is market correlation. We don't just trade blind. Let me explain. We have Euro USD price action, right? Now, Euro
Mm,
USD, if the US dollars is strong, if the US
mm,
dollars is strong, this pair should be reducing in price. It should be selling. Do you understand?
yes.
Just like let me say I have euro, this price here that we're seeing, 1.44, 1.14, is telling me that if I change 1 euros, I will get 1.14 US dollars. You get it?
Okay.
Now,
Yes.
if US dollars is getting stronger than euros, that means if I should change it, I'll be getting lesser. Do you get it?
Mm,
Good.
yes.
So when I saw that, I marked my level on Euro USD on US dollars. I told you guys that if the market should let me just I don't like moving back and forth, but let me just mark it up. This is it. This was the zone. I sent it to
Yeah.
the group on WhatsApp, on Telegram and on WhatsApp. I said if the market should reject from this zone here where it was still at this zone on Thursday. Yeah, this is it. This is it. Yeah. I was like, if the market should reject from this zone, then we are selling USD. The market rejected from them. I see this FEG zone that I mapped here.
Yes.
It did not actually tap in, it came close, but I've already entered my sell trade. Now I don't know what the market will do. The market might still come back and tap into this zone, giving me more confluence to keep on buying Euro USD. But I'm already in a buy trade. We're already in a buy trade. So these are market things. These are the same thing that I'm teaching you that I'm doing. So going back to where we
Mm,
were, I saw that the market was at a resistance level on euro on deep on dollars. So I was like, if the resistance should hold, then that means I am looking to sell. I am looking to sell dollars. So if I'm selling dollars, that means I am buying euro. How do I explain? If dollars is going down, that means when I'm changing 1 euro to dollars, I will be getting more dollars out of it. Do you understand?
yes.
Good, good. So that means if dollars is doing badly, euro USD should be increasing. Do you understand?
Yeah.
Likewise, GBP USD. So these are basic fundamental correlations we should understand. So this was a sell trade here. Now we're looking at this sell trade. Remember, our buy level is here. Remember, I told you this zone has been tapped. It's any if the market should come back to it, it will not hold. Has been tapped
Yeah.
before. The market has already taken the liquidity there. It has filled in the imbalance there. So we're not expecting
Yeah.
it to hold. And I did not target 1 to 3 or too high because I knew I was against the trend. I did not want to, but I just went for 1 to 2 and it was okay for me. That was why we hit our 1 to 2 on GBP USD. Now this is the zones that I'm looking to buy from.
Mm,
Um, this was a beautiful trade. The market came in the first time, right? Now I
yes.
don't trade, hence is after 6 p.m. I did not see this trade. Obviously, my sell trade, right? This was our first sell trade on GBP USD. It came into this zone. I did not see this. Well, I wouldn't have buy this. I don't trade by this time. The market came in. This was an FEG. This was an FEG. It tapped in the first one, tapped in the second one. Are you seeing it? You know, there's an FEG here.
Yes.
It has balanced that place out. Then the market came, swept liquidity on this zone, right? Now, the
Yes.
next morning, the morning, I saw that the market is around this zone. That's taking out the liquidity here. And then
Mm,
I am still watching price action ranging, like, see, a lot of movements want to happen here. Okay. I
yes.
simply went to look at US dollars. I said, okay, if US dollars should start selling from this point, then I'm comfortable taking a buy. Do you get me? I
Mm,
noticed almost US dollars was rejecting from that zone. What else? I had to take my buy trade. I took the buy trade because I noticed momentum was to the upside, and the simple stop loss was just here. This was the main stop. Okay, this is the main stop loss I initially used this week. All right. When I mapped out this structure, January, I used the higher time frame 4 hour demand level. This is the low.
mm,
Like if the market should take out this low, I should forget about buying this pair at all. So from the point of the confirmation I got, this was my tight stop loss. I took this trade, but I did not send it to the community only after I got better confirmation, which was here. I sent it around 2 o'clock, 3 o'clock. This was the bullish. Check the time. I like being very concise. I told you guys to buy it at 1500, and that was what time? 2:42, around 2:52. All right. So I told you guys to buy it at, this was it, 2:52. Good. This was it. Good. Good. That was it. Now let me show you why I told you guys to buy it. This was why I told you guys to buy it. Why did I say you guys should buy it here? I've already gotten what I needed. All right. The markets came here to just take out liquidity and close back inside the range. This is what we call liquidity sweep. No candle closed below this level. Like everything was just a week, close back in, close back in, close back in. Then it shot up, came back
Mm.
down, sell ranging, getting a lot of bullish move around here. Still saw this massive bullish move. That means buyers are really fighting hard. And do not forget,
Mm.
this is the demand level. All right. And I've gotten my confirmation to buy. I should not be selling at the end of the day. I got this bullish candle. I saw that dollars is selling hard. Dollars was selling hard. All right. Then I saw this week. Let me show you. You see this doji candle? Whenever you
Yes.
see a bearish candle, a doji candle, and a bullish candle, that is a sign to buy. It's called
Okay. A
a
bearish
rising sun.
candle, a
A bearish
doji, and
candle,
a
a doji,
bullish.
yeah, is a rising sun. There's something called evening star and morning star. Good. It's called evening
Mm.
star and morning star. Morning star is when you see it form around a demand or support level, and then you see this type of formation you want to buy. Evening star is when you see it form around the psychological level and you want to sell. I will send you the picture when we're done with this. So when I saw this forming, all right, I actually
Mm.
sensed out the trade before this candle finished closing because I knew that I've gotten all I needed. I didn't need to keep on waiting. So I
Mm.
actually sent this buy and I gave us enough room to breathe. This was the entry, this was the stop loss based on the way it is in the group. All right. Entry
Mm.
at 500. Let's tap it in. So based on most of my trade, you can always review them and you understand the thought process behind it. Even the chart setup, I don't just send the signal. When the trade, I send the setup, you will see it too. All right.
Yeah. But some
Yes.
of us like this, we don't understand the setup. We just look at the picture.
No problem. But now you understand as you're learning, right?
Man.
Yeah. So this was what I gave it enough room to breathe. I gave it enough room to breathe. Oh, my system is low. I'm coming. Okay, good. I just plugged it. Now I gave it enough room to breathe. 1 to 2. Are you getting it?
Yes.
And this was the trade. Entered here, targeting 1 to 2. The market hit us at TP1. TP1 is always 1 to 1. What we're willing to risk. All right. Our
Mm.
TP1 was 15700. This was our TP1. This was our TP1. And whenever TP1 is hit, based on my rule, I move stop loss to break even. The TP1 was smashed. The market went very close to our TP2. Right now, we are sitting at a risk-free trade. And that's just the same thing. What I'm teaching you, that's what I'm doing. We're sitting at a risk-free trade, but my original setup is still running. And I've taken profit on this market twice already. I already sent one to the group. I took twice, two buy trades. You get it? The first one was here, personal
Mm.
trade that I took. Second one is here. I sent it to the community. Right now, TP1 has been smashed. We are risk free and are waiting for the trade to play out. You get it? So that's just
Yeah.
that. Now the markets now on this is there are even multiple instances for someone to enter again, but I don't like overscaling in or telling you guys to scale in. I prefer calm and gentle moves. That's just that. That's just that. If someone wanted to scale into this trade, you wait for an FEG, let the market tap into that FEG, then you buy again. This is it. This is an FEG, right?
Mm.
Can you see clearly, or should I remove all this?
Yeah, I can see.
Let me temporarily delete this. I'll put it back. Scaling in now. This is the FEG zone. The market is already established. We are in a trade. Though. This is another thing, scaling in, but you should not start scaling in now until when you get a certain level. I'll walk through everything with you. Don't worry. All right. This is
Okay.
scaling in. Now this is it. This is the demand. This is the FEG. What am I waiting for? Let it come into that my demand or FEG zone, and then I just take in another entry. Do you get it? This was the
Mm.
first. We had two. We had two zones here. Remember, notice we have two zones here. This was the first
Yeah.
FEG zone.
Yes.
Good. And then this was the demand. This was the
Mm.
demand level.
Yeah.
Candle before the bullish impulse.
Yeah.
This is it. Let me zoom it well. Not even wrong. From here. Good. Then let me paint here FEG color. All right. So anything that you missed, you can always watch the video to catch up on it. So this FEG was violated. The market came into this demand. Now, this market can be somehow. Okay, the demand was not even taken out. Looking at it well. The wick of the candle. Are you seeing the wick?
Yeah, the week is on the FEG.
Yes, the market just came like if someone else will take a trade and put stop loss here, some brokers will take you out. And it's still lower. Let me reduce put this FEG down a little.
But later on, it taps into the demand level on at the down part.
This is it. This is exactly it. So the market did not take out the demand level. Do you notice?
Yes.
It came very close, but it did not take it out. But some brokers will already weak you out. Some brokers will take you out. So that's just crazy. So if someone
Like
wanted to
Okta.
scale in,
Like Okta.
let's not start calling people names or giving them bad review. But I'm not traded
I
to
have
Octa FX
I
before.
have used Okta, I have used CTrader, I have used what's that again? Those guys are crazy.
Oh. So normally, if someone wanted to scale in, let us use our Fibonacci retracement tool to see the place of scaling in. All right, the market has not gotten into the. Let's see what do we have here. Below 50%. Okay, this is below 50%. This is around the 60, and it has taken the liquidity at the FEG. So normally, buying at this demand level is a good plan. All right, it's a good plan, but then it's just you and your broker that knows at this point. If your broker takes you out, your loss. If you're still there, it's okay. All right, so this is it. Scaling in, and the market has not the price has not been taken, but there's something else I actually do. I give my trade room to breathe. In as much as I see that this is where my stop loss is, I used to just give it some room because of spread. I've been a victim of that. You don't understand how that
Mm,
was painful. That thing touched me, right? And even a 1 to 2, like wow, 1 to 2, you're already out of this trade. Scaling, right? 1 to 2, you're already out. This is a sweet trade. Now there's something I do, rule of thumb. I will not go and use a 12 pips. This is like a 13 pips stop loss. I don't do that. Give it some room, at least 20 pips. All right. This is me how I trade. Oh. If I was to do this
mm,
thing 20 pips, right? This is a
mm,
20. Let's say this is 20. 20 pips. All right. Then target. What am I targeting here? 40. 1 to 2. Don't forget, my first trade is already running. Oh. I was just scaling in.
mm.
Do you get it? So this is
Yeah.
40. Let's say 1 to 2. Still in the trade. The market has not taken me out. Market has not given me my TP2, but at least I've taken partial profit and moved stop loss to break even. I'm coming. I want to move it exactly at 1 to 2. Okay, let's say this is as close as we can get. Now, as TP1 has been taken, I'll move stop loss to break even. All right, take out partial profits, and then we're waiting. This is just someone that wants to scale in. All together is just one move. Just one move. So that's how you trade the market. Okay, but right now you should not concern yourself with scaling in. You should just backtest what you have learned from this video. All right, yes, and I owed you one video that I said I was one chart, GBP USD. I'm coming. Good. Let me put this guy back. GBP USD. The sell trade I sent to the community. This was it. This was a sell trade. That same principle that I'm treating you here, the price action
Mm.
here, they are both alike. All right. On the 15 minutes time frame, this was the trade. Let me show you clearly. Can you see it?
Yes.
This was the supply level, right?
Yes.
Yeah. This was the supply level here. Let's go lower. I literally sometimes I don't plot it because I'm just seeing it alone. I don't plot it, but if when you see the structure, you just see the cell. You just see. I will not start sometimes point. Oh, this demand, this supply. But I know what I am looking at. This is a supply level, and this is my FEG zone. In my chart, it is 2023. I used to plot it, but these days I don't overdo it sometimes. Yeah, because I am seeing it clearly. But as yeah, this that. So this is it, all right. So the market came in, tapped into my FEG, tapped into my supply. I'm already inside the trade. I gave us the trade at the FEG. All right, that Tuesday, a news impact was about to drop. I waited for the news impact to finish and I marked up this zone. I was like, when the market comes back to my FEG, then I will take that trade. Market came back to the FEG. That was why I gave us a sell trade. All right, I gave us a sell
Mm.
trade as the market came back to the FEG. And if you notice, the market came in close to our TP1. Our TP1, I know I mentioned this thing, like the market played around TP1 too much. This was about TP1 level. 305 or
Mm.
3. This is our TP1. Yeah, 300. Precisely, this was my TP1, 1 to 1. So the market came in 3 times, maybe 4 times, and it did not hit us. First time, as I dropped the trade, it went in beautifully, very, less than 5 pips to TP1. It did not hit. Second time, did not hit. Then it went back to our entry. I did not tell us to move stop loss to break even because my rule says until TP1 is smashed before we hit move stop loss to break even. So the market came
Mm.
back to our entry. We're still in the trade. It came back in, even gave me like a confirmation as though the market wants to buy. But I just ignored the market. I kept on going. Went back in, played around, played around. Then FOMC came out. Then I was at church, 7 p.m. FOMC came out. Imagine that moment when you're done with church, you just open the chart and you smile because you see good profits. Yeah, that was it, because when I was on my way to church around 6 o'clock, I was like, oh, what this trade just they be like this, waiting to happen.
Thank
The
God,
market came
watch my
close to
account.
profiting like 4 times, TP1 at least. Make I know say I don't secure something, stop plus to break even. You know, agree. I was like, whoa, we just entered church. So after church, I came out. I was like, wow. When I came out from church, the team was already close to TP2. I was like, God is good, God is good. So that was just it. So this was the sell trade. So based on the same principle, right? Now, this is the buy trade, where the buy trade initiated from. But then I did not bother sending a buy trade because there's no point of buying it again. Do you get it?
Yeah.
Because we're already buying Euro USD as though we're trading the same thing. Now, here, this is our demand level.
Mm.
This is our demand level. Okay, and this is our FEG. Let me give them the appropriate colors. I paint demand level green as green, indication to look for buy. Do you get it?
Yes.
Remember, we have done what we wanted to do on the higher time frame, which was the 4 hour time frame. We're just looking for our entries now on the 15 minutes time frame. We started from the 4 hour time frame and then we went down to the lower time frame. Do you get it?
Okay.
Good. Now I am waiting. Anything around here, I am not interested. So the market came in. What are we seeing here? And when I was setting my TP2, I was also making sure that my TP2 was not up to this FEG zone while I was setting my TP2. And it just gave me my precise 1 to 2. So the market, see as the market, they obey structure. It came back in. Let me show you something, right? It came back in to tap it the first time, right? Now, where's
Mm.
our buy? The same thing that happened with Euro USD. Let me show you. The markets are mirroring each other. This is it. It came in the
Yeah.
first time. I tell you, they are doing the same thing. Do you get it now?
Yeah.
Good.
Euro USD, GBP USD.
The same
Okay.
thing. So it's just there. So it came in the first time, even though someone was to do this 1 to 2 type of trading that I usually do, right? 1 to 2,
Mm.
you have already taken your profits here. This is my entry confirmation, this bullish engulfing candle. If I was to trade, though, but I was not active, I don't used to trade by this time. This demand, I got a bullish engulfing candle. This is an entry for me. But then I still thank God that I did not take this trade. Else, I would have been taking out, yeah, 1 to 2. Yeah, my 1 to 2 was smashed already. This was a good trade, but I did not trade it. Move on, right? Because that's just that. Then the next day, which is Thursday, I see that the market is still around that same zone, right? It's still around the demand level. It came back to demand level, although the demand has been tapped. It still came back
Mm.
in, but it did not break it. This is like a liquidity sweep, right? There is
Mm.
still an FEG up here that has not been filled. You see this
Mm.
FEG?
Yes.
Good. Yeah, this level has been tapped in already. There was an FEG here that has not been swept. So I could as well buy and target that zone. So if I'm to buy
Mm.
here now, I did not take this buy. I already took the buy on Euro USD. This was our buy. 10 o'clock, I was not certain to buy because I was looking at dollars. I used to correlate it with dollars, all right? If I'm the type that don't correlate to dollars, I might as well just take my buy here and put my stop loss here, or maybe look at previous structure to give it a good room. Some traders will put it at this low. This is a low. That based on market structure, okay? This is a good low.
Mm,
This is it. If I'm there, and then what are we targeting? At least 1 to 2 is a normal rule of thumb. 1 to 2. And the 1 to 2 is not even up to the FEG zone that we're targeting.
mm,
This is an FEG zone, right? This is our
yeah.
1 to 2, in and out. So you see how potent this works. I did not start cherry picking any chart. We just went to pick a chart and we're moving to it. So when you're doing this, you have at least 70% win rate. I have seen a time where I got like 85% win rates in a month. Do you get it? That was nice. The lowest I have
Mm,
seen is 60 something. But on average, this is what you're getting, and you just have to stay patient to it. Okay?
mm.
So that's just that. That's just that. So you can rewatch this video, learn what you learn. The assignment is this: go and plot out demand and supply level for me. Mark it out, send it to me as multiple as you can, and then we'll continue from there. Okay?
It's all right, sir.
Right.
So, one more question, please.
Yes.
How do you calculate? How do you know your pips? Like when you are setting or you are plotting out, how do you easily identify your pips without taking pen and paper to calculate?
Wow. If you look at trading view, you can see your pips count here.
Okay.
Let me
So
show
this
you.
green in the middle shows pips count.
This thing here is showing pip count. Let me show you.
Okay.
Let me see this
Okay.
trade here now. Even without you counting it, like without the trading view, these are basic fundamentals. Here's the price here, 1.3255, right?
Mm,
Now, where's my stop loss? Let me just calculate 1.3255. Okay. Then where's my
mm,
stop loss? This is my stop loss, right? 1.32 minus 1.32302. My calculator showed me that's 25 pips. Do you get it?
mm.
So if,
Yes.
if you're minusing it, 1.32, this is even three, oh, this is 300. This is 300, yeah? That's 25 pips. And look,
Mm,
are you getting me?
yes.
That's 25 pips. How do I calculate it? From 1.3255 minus 1.320, that's 25 pips. You know how to count pips.
That,
You don't count the
that,
last number. The digits you count, you start from, don't count this 4 at the end. Let me just show you here.
okay.
So you don't count the last number. The
Okay.
number that is 10, this 5 here is 10. If this
Okay.
5 goes to 4, it's 10 pips. If this
Okay.
5 goes to 3, it's 20 pips. If this 5 go to 2, it's 30 pips. Do you understand?
Mm.
I've learned normal pips count. We know how to count pips. You don't know how to count pips on your own normally.
Ah, not so. I have to carry a pen and a paper and be calculating one after the other.
Okay, you have to learn how to count it faster. And TradingView shows you that. Now, what I did here now, all right, I can see here. Let me see. Let's go back to here now. Here it is showing me that my here now. I seeing my stop loss and everything. Okay, this is my target here. Here now it's showing 35.6. I see
Yes.
that's the pips. 35.6 pips.
Yeah.
So this is the where you can count pips from. Remember, I was risking like 25 points, 25.1, right? So that means I want to get like 50. If you're
Mm.
risking 25, you want to get 50. That's your 1 to 1. Do you get it?
Mm.
So that's just it. This guy was already showing me. So if I'm risking 25 pips, I'll balance my lots. So now it is. And I don't used to bother counting it again because I know what I am seeing. I've been trading this for years. So you just look
Yeah.
at it. My head already calculate down. Do you get it?
Yeah.
Yeah.
You don't turn to Baba in this area. So
Ha 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 ha. Now here now you see stop. This same trade. You see this sell trade. How much are you
yes.
seeing here? 35.2, right? That's
Yes.
our stop loss.
Okay.
Good. And our target is here. Quantity is 70. Still here, this 698 is approximately 70. So you can just count it. I
Mm.
usually count my stop loss, then I move it to 1 to 2. From my stop loss, I move it to 1 to 2. And that's just that. Okay.
It's, it's all right, sir.
All right. Any other question?
What was I? After you're done teaching, what I do usually is I rewatch your videos and I go look for uh relative video.
Okay, no problem. That is highly that's you being a good student. I can refer people to you. Yeah, I have people that I've learned from that they are very good at teaching that I can refer to you to. All right.
Okay.
Yes, so that one we can I can that's a beautiful one. You just go and research on fair value gaps on demand and supply level. Okay, it makes it even more better for me. So when we come in, we're just like doing revision and you be asking me questions. Okay, I don't have a
So
problem with that.
so my assignment is identifying fair value gap and demand and supply level.
Yes. Remember something that is very important. Everything we're doing is price action. We're following market structure. The first things that we are doing before all these identify, yeah, it is important, but we already look at market structure. This is it. Where we started drawing market structure.
Yeah.
Now, market structure is king. All right. Firstly, you look at the market structure, right? We identify the
Mm.
market structure. In that place where you want to put your demand, your support, you will notice that there should be a demand there. Go and look for the demand, look for the FEG. Then you keep on doing the same thing if it's on an uptrend. Do you get it?
Yeah.
Now, if it's on a downtrend, you do the same thing. Okay?
Look for supply and the FPGs.
Yes. A valid supply must create a what? A break of structure and an FEG.
And FPG.
Okay?
Yeah.
Yes, sir. Yes, sir. Okay, then that
Uh,
wraps up the session.